Have you ever had that one stock you really believed in? The kind you thought would just keep growing forever? Then out of nowhere, boom, it crashes and you're left stunned? That's what happened with Alibaba. Once the crown jewel of China's tech scene, Baba traded as high as $300, then collapsed all the way down to 60. But now, in 2025, something strange is happening. It's bouncing back, big time. So people are asking again, is Alibaba making a real comeback? Or is this just another dead cat bounce? Let's break it down. From business fundamentals and strategy to tech, AI, geopolitics, and the stock chart, I'm going to walk you through everything you need to know about Alibaba like I'm explaining it to a friend. Let's rewind. What happened to Alibaba? First, Alibaba didn't just struggle. It got crushed, blocked from IPOing Ant Group, fined nearly $3 billion for anti-monopoly, got hit by China's regulatory crackdown, lost investor trust worldwide. The stock from $300 to $60. Brutal. But here's the key. Alibaba didn't give up. It went quiet, then came back with a plan. New leadership, new business structure, and a whole new vision for the future beyond e-commerce. The 1+6+N restructure, why it matters. One of the biggest changes, Alibaba's new corporate structure, I times 1 plus 6 times N. It spun out 6 major business units. First, China Commerce, times plus 3%, market saturated. International Biz, times 29%. Lazada and Trendyol booming. Cloud and AI, times 11%. AI revenue up triple digits. Cainiao Logistics, times 2%. IPO delayed. Local services, times 12%. AMOP and LMA turning profit. Digital media, times 12%. Youku back to profit. Each unit runs more independently, more agility, more focus, and potential to go public separately in the future. It's like what Amazon did with AWS, and it worked. Betting big on AI and cloud. Now this is the part that gets exciting. Alibaba isn't just trying to recover, it's trying to reinvent itself as a full-blown tech powerhouse. They're investing over $50 billion into AI and cloud over the next 3 years, released their own large language model, Q13, made it open source and enterprise ready, slashed cloud prices up to 55% to gain market share. Target, become Asia's leading AI infrastructure platform. So yeah, this is no longer just an e-commerce company, but the risks are still real. Here's the catch. Alibaba's not operating in a vacuum. It's in the middle of a tech cold war between the US and China. US banned exports of high-end AI chips, like NVIDIA's H100. Alibaba had to start designing its own chips, Yitian and Hongguang. IPO plans for Cloud and Cainiao postponed. Foreign investors still wary of Chinese regulations. It's a massive challenge, not just for Baba, but for any Chinese tech company trying to scale globally. Let's talk technicals. What's the chart saying? Technically, Baba's made a strong move, from $60 to $130. Key support at $100. Resistance zone around $133. If it breaks above, could head to $150 plus. RSI and MACD still look healthy, not overheated. It's not a rocket yet, but it's setting up for a potential breakout. Price targets based on real scenarios. Scenario bullish, target 180 to 200, based on AI and cloud grow fast, China stabilizes. Neutral, 140 to 160, based on steady earnings, no major shocks. Bearish, 90 to 110, based on more crackdowns, weak Chinese economy. Most analysts, like Morningstar and Barclays, give Alibaba a fair value of $160 to $180, which means at around $130 today, it may still be undervalued. Is Alibaba worth it? Here's the truth. Alibaba today is not the same company it was 5 years ago. It's not just a marketplace, it's a tech ecosystem. It's not slow, it's getting agile. It's not irrelevant, it's a player in AI, cloud, logistics, fintech. But the geopolitical risks are real. Chinese policy remains unpredictable, and the trust from global investors is still recovering. So, should you invest? If you believe in China's long-term tech rise and you're comfortable with volatility, then yes, BABA could be one of the most undervalued giants out there. But if you want stability and low risk, there are probably better options. If you made it this far, thanks for watching. I try to break down complex stock stories like this in a way that's clear, fun, and insightful. So if you liked this breakdown on Alibaba, like, subscribe, and drop a comment. What stock should we dig into next? See you in the next video, and remember, the markets are complicated, but understanding them doesn't have to be.